Hello traders, Gary Wagner here. Approximately 11:15 in Honolulu, 5:15 in New York. It is Tuesday, the 26th day of June 2012, and this is the daily report for gold and silver. Option expiration day, July COMEX gold, is being cited currently for the sell-off that we witnessed today in the market. We're well off the lows. Today we had a low of 1566. Currently trading at 1571 to 72, roughly in that area, down about $12 on the day. Silver also hit fairly hard today, off about 43 cents, 27.21, with a low of 26.74 and a high of 27.66. Now, today we did have a rally in the Standard & Poor's, our equities markets, of course. Crude oil a little bit firmer, as well as the dollar. First chart I want to take a look at today is going to be our daily dollar chart, Heikin Ashi format. Let me go ahead and blow that up. Now, as you can see here, when we take a look at the dollar index, we had this high just above 83.50. Market begins to trend lower and does find support roughly at 81.50. Right in this area here. When we go back in time simply to look for historical references of why this particular area might make sense, there is some historical precedent. You can see what we're calling support being resistance right in here. You can also see it becoming resistance right in here. And this, of course, is last year as the market traded off a low of about 75 and came back up. Same with this area. This happened prior to September, October, this rally that we saw here. The market then will trade lower and trade within a trading range for quite some time. As you can see, this is February all the way through May. And in May, really everything changed because we had this incredible surge in the dollar strength. You can see that represented in the Heikin Ashi by almost a solid band of green. We only had this one red candle, and lo and behold, that particular red Heikin Ashi comes right at that 81.50 area. Reason for looking for historical reference points is they tend to give us good insight and information as to the possible actions of the market in the upcoming days and weeks. Now, we did find support in this area once again, good historical precedents, and we see the market moving back up. My sentiment right now is that we really don't have real resistance in the market till just above, call it 83. I'm looking at the bodies and not necessarily the highs of the marketplace itself. The bodies give us a better indication of the range, of course, and there is no doubt that this market could easily go back above 83 on the dollar index. So what does that mean for the gold market in terms of how the dollar is moving and technical levels that we're looking for? It's quite obvious that the market is still under pressure. We don't need a rocket scientist to tell us that. So simply what I've done is I have charted some historical reference points in which we will probably find support as well as resistance. Same type of strategy that we just did with the dollar index, meaning we're looking for points in time that have historical relevance and historical history. Now, in terms of the upside, the next target obviously for bulls is roughly in the $1,600 area. It is a psychological target, but it also has a little bit of history behind it. We can go back in time, but in the short term, again, we're looking at a 4-hour Heikin Ashi chart. You can see it was resistance in this area. Obviously, it broke well above in these two areas here, but would come back down. Next area is really based on this support level that it held for just a little while before breaking. In terms of historical relevance and data points, you can also see activity right in this area, and this is the resistance area that we are currently facing. That resistance area is between 1580 and 1600, right in this area between these two lines here. Next, if we look at the different bottoms that we have had in gold recently, and again, a lot of times what I will do is I'm looking at the bodies rather than the tails or wicks of these candles. And the reason being is that when you get these extreme intraday lows or highs as paper is being filled, as orders are being processed, so to speak, you are looking at price points that are literally the blink of an eye, so to speak. In other words, before you know it, they're gone. And so the bodies are showing us a more accurate depiction of the actual trading range. In that, we have very, very strong and what I believe to be critical support areas that this market must hold. Now, you can see this 1571, this current area that we're at. This right now is the first level that it needs to hold, because between 1580, call it, and 1570, there is some very, very strong support in the area. And if it breaks through there, my sentiment is we're probably going to go and test the, call it the 1530, meaning down here, to 1540 area. Now, traders, as you know, we had a very, very nice rally in the market yesterday, only to see all of those price advances really dissipate and really be absorbed within this options expiration. Now, we talked about the fact that when we saw this market really sell off last week, and this is the 21st, this is that sell-off that I'm referring to. My sentiment was to let the dust itself settle and then see how the market is reacting, because we still have the fundamental issues at play. The European Union's debt crisis is very, very much in the forefront of traders' minds. Now, there is a summit meeting that will happen on Thursday. However, there is very mild expectation of anything of value coming out of that. But in terms of a technical basis, what we really want to do is see, is the gold market, in terms of its price point, going to be able to hold this level right in here? And as I said, that's below 1570, roughly 1565 in that area. I fear if it cannot, it will probably come and test roughly the 1530 to 1540 area. But my personal sentiment is that this level has a high probability of actually having the ability to hold. Traders, and finally silver. I've changed over. We're now looking at our September contract of silver off of the COMEX. And we have a couple of different areas of support and resistance that we have been plotting. But here's what I'm finding that I believe is noteworthy. Unlike gold, we've had a lot more pressure on the silver market. And it does appear as though we might in fact find some support right in the area of 2660, call it. If we take a look at these recent lows right in here, you can see that in terms of historical precedents again, in other words, points in which this market went and how it reacted, we could easily see some type of support within the market. Now, it's flirting with 27, currently trading 27.005, and my sentiment is that we want to pay very close attention to this particular price point, because there is a high probability, I believe, that if we are to see this market genuinely slow down in terms of its descent, meaning the price going down, we will probably see some sort of support in this area and look to enter the market from the long side. Upside target is going to be initially our first level, which is right here at $29, going long roughly at $26.50. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.